What's up everybody, welcome to the Stocks channel. My name is Corey and today in the stock market we did get a bounce across the board as we are starting to break through some critical resistance zones and we could be due for that counter trend rally. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today in SPY we were up 0.88% and we did close back over 393 and we did close over the 5 EMA and we also did close above our resistance trend line. So I'll remind you again that SPY above 393 is a lot more likely going to see a counter trend rally, but we do have strong resistance just above at 408, 420 and 430. And as long as we're in the strong downtrend, we will have bears sitting at all of these resistance levels, and we will also have some resistance from this negatively sloping 20 simple moving average. So even though we are expecting to see some sort of counter trend rally in the short term, there is no way that you should be looking at a counter trend rally in a bear market as anything other than a lower high before we put in the next lower low. Remember, in order to get bullish, we need to see higher highs and higher lows. And we are not going to assume that is going to happen. We are going to wait until price action confirms it. So right now, while SPY is above 393, you're looking for upside resistance and you are looking for any signs of price action rejecting at resistance. And then you should be preparing for the possibility of a next leg lower, even though there will always be the possibility the next leg lower will be a higher low. But the bulls will have to prove that to us and we will need to wait for confirmation. That's the definition of it being a downtrend until it's not, is that we don't make any assumptions and we let the price action do all the talking, because the price action is king and the stock market doesn't care what you think and the stock market doesn't care what I think. So don't just expect the bears to roll over and die easily. While they have the downtrend, they are going to take full advantage of shorting at resistance and trying to drive the market lower. Below 393, you're looking for the next leg lower at a retest of 385 and then the next legs lower at 376 and 370. On the NASDAQ 100 triple Qs, we were up 1.4%, closing right at the 5 EMA. And just like I said on SPY, it is possible that we are due for a counter trend rally off of these lows, which will use this support level right around 285. The counter trend rally breakouts at this point will be a break above about 295, 303, and then 306. And if we get above 306, you're looking for strong resistance at 318 and 330. And there will be a lot of bears at those levels. If we break down below 285, the next legs lower would be at 276.8 and then 269.5. And you do want to be very cautious that we are still below the resistance trend line and we will not be breaking above that until we get a daily close above about 301 to 303. In the Dow Jones, we were up 0.59% today, closing back over the 5 EMA and closing over the 13 EMA. So this is definitely somewhat of a bullish day, and we are very close to testing that 20 simple moving average. We also got a daily close above our resistance trend line. So if we see any follow through with tomorrow's price action, this will be looking a lot more bullish in the short term, but we still do have the downtrend, so we are still looking for a lower high. A lower high could be anywhere around 324 to 326, and then we could still go lower. Otherwise, you're looking for a bullish breakout above 326 to retest 333 and 340. As I continue to warn you, there will be bears at all of these critical resistance levels, so you have to watch price action at those levels and be prepared for a potential reversal at any resistance as long as we're in the downtrend. If we break back down below about 318, you're looking for a retest of the low at 310 and 308. And if we break below 308, the next leg lower will be at 297. On the Russell 2000 IWM ETF, we were up 1.8%, closing back over the 5 EMA and over 178, which was a resistance level. So we are definitely seeing a lot of bulls buying at this level right around 175. But if we lose that support level at 175, we are very likely going for that next leg lower to close the gap at 165.7. And if we lose support at the gap fill, you're looking for the next leg lower to be down here at 156. To get more bullish, we need to get back over 180 and 183 and then start closing back over the 190s, and that will look like a bullish breakout. So if we start seeing bullish price action, we will adjust accordingly because we'll more than likely lose the bear trend if we get those bullish breakouts, and then we will start to see the bulls gaining momentum. On the ARKK ETF, we were up 4.64% and we did close back over $40 after we closed the gap, but we are more than likely going for that full measured move lower to retest the lows around 36. And if we lose support at 36, you're looking for the price target at 33.7. We could be getting a lot more bullish if we can get above 47 and definitely above 52. and not any sooner than that, because this is a very strong bear market with a very strong downtrend, so it is very likely going to continue to trend lower until it gets a bullish breakout. On the VIX, we were down 3.6% as we see the VIX continuing to struggle to break back above 30, so we are seeing the VIX getting crushed as it gets into that resistance zone at $30. But we can't say the VIX is bullish until we make a lower low, which means we need to break down below 25 and get a close below 24. As long as the VIX is above 24, this is still going to remain a volatile market, and you need to be a lot more cautious of the next leg lower if the VIX starts spiking out above 30. On Bitcoin, we're currently flat, trading right around 29,700, and we are still building that base of support around 28,000. Remember, I expect this foundation of support to build up before we get a bullish impulse to retest resistance at 37 and possibly even retest the bullish breakout at 40,000. If we break down below the support at 28,000, which is a real possibility while we're in the downtrend, you're looking for a retest of the support at 25,000, and below that we're coming all the way back down to $20,000. So we are in a downtrend, but we see the bears running out of momentum as the bulls are buying at 28,000. So don't completely ignore this support zone, because there is a possibility we get a bullish rally off of this support. On NVIDIA stock, we were up just over 5% today, and we did close back over the 5 EMA, but we are still in a bear trend and we are still below some very critical resistance. And we did have earnings after the bell today, and we still have a valid price target down here at 150. So as I always say with earnings reports, anything is possible, so you do want to be very cautious over the next few days as price action settles out. But don't rule out the possibility this stock is trying to put in a bottom down here right around 150, and then that could be the next bullish impulse coming from that support. If we do break down below 150, the next leg lower would be down here right around 125, and we're getting a lot more bullish once we close above 210, but on the way to 210, we will have resistance at 179 and 199. On Tesla stock, we were up 4.88% as Tesla did bounce off of that support at $620, but failed to close back over the 5 EMA, and we still do have a very strong bear trend. If Tesla fails to hold support at 620, the next leg lower would very likely take it down to 570, even though there will very likely be support right around $600. So on a breakdown below 620, you're getting more cautious for the next leg lower. And please keep in mind, this is still a downtrend. So even if we get a bounce, you are still looking for the possibility of a lower high at any of this resistance above. And resistance is currently sitting at 700, 762, and 828. On Apple stock, we are flat on the day, basically going absolutely nowhere. And we did close below the 5 EMA yet again, and we still have the strong bear trend. Apple has strong support, as you can tell, at 137, but if that level fails, we could be heading down to the price target at 130, even though we will have support on the way there right around 134.5. Bullish breakouts at this point will be closing above 143, getting back over 150, and getting the bullish breakout above 156. So the bulls have a lot of work to do for a lot of upside resistance to break through and start making higher highs and higher lows to reverse the downtrend. On the financial sector, we saw some very bullish price action today, going up 0.8% and closing back over the 20 simple moving average, and we're very close to reversing the bear trend if we can see the bulls follow through tomorrow. Another day of closing over the 20 simple moving average could send the bulls all the way back up to retest the 50 EMA. The industrials were up 0.58% today, closing back over the 5 EMA, but we still do have a bear trend. The healthcare sector was flat on the day, going absolutely nowhere, but it is closing over the 20 simple moving average and the 5 and the 13 for 3 days in a row, and it did test the 50 EMA as resistance today, but as you can tell, the price action did reject from that resistance. Overall, this is still a relatively bullish development because the bulls in the healthcare sector did reverse the bear trend, so the next bullish breakout will be a close above the 50 EMA. On the energy sector, we did go up over 2% and close at a brand new 52-week high, and we still do have a very strong bull trend. The energy sector could be trying to get to $90 from here, but be very cautious buying at these levels because we could be nearing an energy sector correction. So jumping back over to the S&P 500, this was definitely a bullish close in the short term, but there is nothing that says that the bulls are taking over until we see higher highs and higher lows and get some type of bullish breakout. Use that very critical level at SPY 393, and as long as we're above 393, the counter trend rally is a real possibility. And while we are below 393, you need to be looking for that next leg lower. As you can tell, the bulls have closed above 393 for 3 days in a row, so they are definitely working on doing something. So don't completely rule out the possibility that we make an attempt to test some of this resistance in the near future. Make sure you understand this is a downtrend until it's not, and this is a very volatile market, so make sure you're using proper risk management. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank Trade Alerts beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of the video. I also have the Stocks channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks channel trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.